All right, everyone, here we are with another video with Invest for Tomorrow. And to all the subscribers, welcome back. And to all the first-time viewers and investors, welcome to the channel, Invest for Tomorrow. For every single viewer and investor coming across the channel first time, or you're a subscriber and you haven't already checked out the Patreon, I highly encourage you guys to click on the link down below in the description, because we are watching different ticker symbols to add to your watch list. And what better time to be watching stocks, doing your due diligence, and making rational decisions based off of what you find and your research when the stock market is going downwards. This allows you to not have the fear of missing out. It gives you time to make rational decisions, being level-headed, focused in the market by watching these stocks. But I'm there to enlighten you guys. I'm not there to tell you guys to buy, sell, or hold any positions, but I am enlightening everyone on potential opportunities that are ending up in oversold area or on their way there and have so much potential moving forward. So if we're in a stock market crash, it could take a lot longer for this to hit the bottom and start to work its way back up. But if we're in a stock market correction, we could possibly be in a very healthy standpoint to go ahead and take the opportunity. I did a video before saying if we're in a stock market crash or correction where opportunity meets the prepared, and we want to be prepared and aware. So let's talk about this. And if you haven't joined on in, the link is down below in the description. So here we are, S&P 500 index. I have a very important date to share with you guys, and that's back here January 26th to the 27th. There was a big drop here from 38.58, 38.60 all the way down here to 37.33. I want you guys to remember this day for just a moment. Now, here I have an example of the repurchase agreements when they happened weekly, and that is February 2nd. We were at 37.76, and we hit a high here of 38.43. That's a nice big jump there of almost 50 points. And you're like, what is he talking about? But I need you guys to keep up with me. So the February 2nd date, remember it for me, please. And the jump was 50 points. And I need you guys to remember 27th of January, and the drop was almost 100 points, 130 points. Please remember those two dates as we go into this video. So here we are. On the 11th, there was a big announcement going into the 12th of February, and that was the change of the repurchase agreements. So things kind of stayed leveled. Then they started to pull down after we hit a high here, right, on the 17th. And a lot of investors that are not aware have been trying to push up the prices because they're thinking they're getting the best price every time it went down. Okay, I want you guys to be aware of that. It continued to pull down. The Federal Reserve had to show up earlier this week. They brought it up by bringing some type of hope and speculation back into the market. And since that date, they haven't popped up again, and we're going downwards. Now the RSI and the MACD on the 30-minute and even on the 1 day are showing room to go downwards. So let's talk about the 2nd of February, the 27th, right? The 26th to the 27th that I want you guys to remember, and so forth. So here we are. The 2nd of February was one of the term operation dates to start a plus 10 basis points. And you guys saw that. It went up 50 points. Well, usually on these dates, on the start, on the 19th, the 26th, the 2nd, the 9th, I have all those dates circled in the charts. And I used to do S&P 500 index updates weekly. And those were the dates that the basis points of 10 were applied, and it would start. And usually the market would react to it in a very hopeful or speculative way. And it would bring up the market to newer levels or sustain it from going lower, and it would go up anywhere from 20 to 80 points. Well, on the 2nd, it went up 50 points. Now, on the other dates, it went up 20, 30 points. It was always pushing up the market a little bit. Now, that has been removed. So if I was to cut this off, right, let's go ahead and remove it here. I want you guys to see what would happen if I trim it and I remove it. We would lose plus 10 basis points on all those dates, and now it'd only be plus 5 basis points. So that's a total of 15 basis points. And I know you guys are like, what are these basis points? Well, it has something to do with the repurchase agreements and buying bonds and all these different things in the treasury. So much more complicated than I can even express or even understand myself. I just knew there was a correlation to these dates and how the stock market was reacting. And I just know that the more basis points, the stronger it would be for the repurchase that the desk planned to conduct overnight, right? So we lost 10 basis points basically after the 11th. This was the date with the next scheduled date, and it had an asterisk. I was really concerned about that because there never had been an asterisk, and 11th was the last date. That was on a Thursday. That landed earlier this month, and then on the 12th, they changed things. So remember, we cut off the 10 basis points. This is what it looks like now, basically. It's the same thing, but they changed the layout. We got the 5, right? We got the 500 billion, and we got the time. Let's go back over here so you guys can see what I'm saying. We got the 5, we got the 500 billion, and we have the time, okay? So they changed it, and that's what's happening every day. So we're basically losing plus 10 basis points. That was really helping hold up the market in such a way that it would happen in the mornings, and then in the afternoon, the plus 5 basis points would happen as well. So this is something that I'm noticing already, and I was waiting to talk a little bit more in depth about this. But when you put the 30-minute chart frame, let's go ahead and put it, you can see here how at these times, and I want you guys to pay close attention, early in the day we would fall, and then towards the middle of the day we come back up, right? And then it just kept doing that. It did it once, twice, another time. It happened here, and then we went up. Then we fell a lot. And today, we started the morning off pretty sharp in a downward direction. And then towards the afternoon, we started to rise back up. It's almost like the anticipation for that repo was coming in. So then sometimes when it used to be the plus 10, the plus 5, we would have the plus 10 take us up. And then the plus 5 would hold us up, kind of leveled off, or kind of just push us up a little bit higher. It happened here as well. This is the 9th. It went ahead, it brought us up, and it kind of just leveled us off. And then other times it just went up completely. So it's very interesting. And then it would create speculation and hype for the next day usually, and it would continue to push up. And that's what would happen every single time for the next several days. Well, those repurchase agreements are gone right now. And this was the date, we're going back to the 27th, that this was announced. I didn't see this till recently. This was in a whole nother section of the whole entire page that I was like, whoa, I missed this. If not, I would have paid attention. And now we're going to see the behavior of the market once they found out this. And that's usually the institutional investors that caught on to this, and the several investors that are smarter than me. I guess I'm not smart enough to catch on to everything, right? So they basically go ahead and say, in light of the sustained smooth functioning of the short-term US dollar funding markets and consistent with the most recent FOMC directive, which I don't even know what that is, but that probably has something to do with the Federal Reserve, I'm sure. The open market trading desk, the desk, which is basically the Federal Reserve, the desk, right, always making these decisions. When we would go back to right here, the desk plans to conduct the overnight repo purchase agreements, basically are saying, hey, we're going to kind of slow down, and we're no longer offering regularly scheduled 1 month term repo operations following the current monthly scheduling period. So it said the 1 month term repo operation scheduled for February 2nd and 9th will be the last regularly scheduled term repo operations. That right there affected the market already since the 27th, but it was very subtle. And you can go back here and you can see the 11th was the date of the asterisk, and then on the 12th, right, effective February 12th, they changed everything around. So what does this all mean? Well, when we go back to the 27th, which was right here, you can see how fast from the 26th to the 27th we fell, almost 130 points. Everyone thought this was a discount, brought it back up, and a lot of institutional investors and investors that caught on to this took advantage of it, and then they brought it even lower. And that's where we hit our first correction, but we didn't even notice. So then this was so low that everyone said, oh my gosh, this is such a great price. And they brought it all the way up to new highs, and from those highs, we've been going downwards. So is there room? Are we in a stock market crash? Are we in a correction? You know, there's room to continue going downwards. I'm hoping we're in a correction, because that's where opportunity meets the prepared. And here is an article that I want to share with you guys. And I'm going to put the link down below. And since it's going to make the video so long, I'm not going to go over everything about it. But it talks a little bit about the NASDAQ, the Dow, the S&P 500. It talks about how the Federal Reserve, is focusing on keeping interest rates low. But a lot of investors are worried because inflation is going to go up. And when inflation goes up, interest rates are usually increased. But the Federal Reserve has stated they're not even thinking to put interest rates up, but it still scares investors. So that's why we're seeing that decline in the market. Then also the bonds. Yesterday was a big deal. Bonds weren't being purchased. Nobody's really attracted to them. And then they're comparing it to 2013, which I definitely recommend reading a little bit more about. And the conclusion. So, rumors abound the market that President Joe Biden may actually push for another larger stimulus round after the $1.9 trillion package, which could stimulate investing, right, in the long term, into the year. So if there is another one after this one, that's going to continue to probably, I wouldn't say inflate, but it could pump up, not even pump up, but it could rise up the market over time because it's going to be more attractive to investors, right? These stimulus supports. So stimulus support is not leaving anytime soon, and the Fed has assured the players several times that the U.S. economy is far from reaching full employment, yet even that doesn't mean that the Fed is going to tighten monetary policy. Thus, the stock market's current tantrum, nothing more than a sign of a healthy correction. That's what I'm hoping for myself too. But I'm going to put this link down below so you guys can read a little bit more through it. I hope I made some sense of everything I'm pointing out. There's like a lot of terms here that a lot of people aren't understanding. And there's a lot that goes on behind the scenes that I personally don't even understand. I just try to put everything like a puzzle, 2 and 2 together. And then I start looking at the charts and it makes sense. So I hope that the dates and the charts made a little bit of sense to you guys. What I'm really looking forward to is for this to change from this to the previous one with the plus 10 basis points if necessary, because it will continue to push the market upwards like we saw in the last year. So that's something that I do want every single investor and viewer to be aware of. And if that does not come back, I guess the Federal Reserve is hoping that there's a slight correction and the market can build itself back up from this correction instead of continuing the repurchase agreements up to 15 basis points daily and keeping it at plus 5, and some point remove the 5 completely as well. So as always, guys, if you guys want to know what I'm watching throughout this correction or crash that we're currently going through, you can definitely join us in the Patreon link down below. Thank you guys so much for watching, and let's make some money.